Hello everyone, it is Evan from the Trade Risk here on Saturday, November 21st with a weekend market recap video. We are first going to analyze the current market environment. We're going to look at some other markets, leading sectors, and then we're going to get right into some actionable trade ideas for next week. And on those trade ideas, I do reserve one of my favorites, the very best, for the weekend newsletter that I publish on Sunday. And you can sign up for that for free by clicking the link on the top right here to join that newsletter, or head to thetraderisk.com/join. Try and do some unique content, and with that I usually include one of my favorite trading setups looking forward. So if you like the ideas that I usually present, then definitely get on that list. And that goes out every Sunday, usually 6 p.m., 7 p.m. Eastern time or so. So let's jump into it. The SPY this week, let's go to a weekly time frame. We can see here that the bulls had a very impressive stand of 3.34% this week, and we completely negated last week's sell-off. So last week's pullback has completely been reversed, and almost textbook we got a bullish engulfing bar, but we couldn't quite close above 209.49 to give it that sort of textbook confirmation there. But in my head, I mean, it's effectively that. We completely reversed it. I think that's a very bullish sign. But again, we need to contain our sort of optimism here, because we do have some pretty large overhead looming resistance here right above us. So basically 212, this area that held as resistance for all of 2015, is only 3 points above us. So we do need to keep that in mind. We need to respect it. And until that changes, until we can start to close above that, we're still capped off there, call it range bound or consolidating sideways in a long-term uptrend. And that's sort of the state that this market still is in. If we go to a daily time frame, the more immediate range, which is similar to what we just discussed, but the more immediate range is pretty wide here. It's about a 9-point range. It's from the 202 lows from this week all the way back up to the highs of last week, right around 211, 212 area. And I think that's sort of the range that we need to look at right now. And we are heading to the top end of that range, so we're going to be interested to see, can we make it up here next week? Do we first find resistance here where we found resistance last week? Do we roll over prior to that? Do we come in Monday and gap lower, and all of a sudden we have a lower high in place? Do we shoot right through it? Again, these are all the kind of context, the clues that we'll be looking at next week as we start to get closer up into the last week's highs here. But again, I think the way we can look at this market now is we potentially do have a higher low now in place at 202. And that initial low that I'm keying off of would be down here right around 188 or 190 area in the SPY back from late September. So again, if we consider this the first low, if we consider this the first swing high, then we have a higher low. And now as we come up here, we need to see, can we make a higher high? Now, of course, you can look at these swings in different levels. You could look at all these little mini swings along the way. But essentially, that's what I'm looking at. This does seem to be a sort of intermediate term low that we're trying to put in here, a higher low. So that's the context that I'm looking at this market. Again, I think the bulls are still very firmly in control. They're above all of the fast moving averages. We had a little bit of a pause here on Friday. So again, we want to see what that brings in on Monday, looking into next week. And we are getting into, historically, I believe is, one of the more bullish kind of seasonal trades here into this year end. So we'll have to see if we do continue to sort of just levitate higher here into the year end, and maybe we do start making new highs on 2015 as we start to close it out. But that's all sort of speculation. Again, we can only look at what has happened here and analyze price of where it currently is. So I think right now, again, you want to still have some exposure on this in this market. We continue to do so. We've been rotating in and out of names, continuing to pick up names that are acting well in favorable sectors. We had a really strong week, members of the Trade Risk this week, and we do still have that long exposure. While not all in, we are definitely rotating through a low to moderate stance of sort of risk on the long side. So with that said, let's take a look at some other markets here. The IWM, again, these are the small caps that we do want to see start participating here on the long side. On the upside, we want to see the bulls really start making a move here, start rotating in for some of this small cap risk appetite. I think that would be very constructive for the market, be a nice breath kind of lift of fresh air if we can start to get these names participating. Again, we are now back above 115 area, this 115, 116 band of resistance. I think that's very important. But still, you can see we're not just off to the races. We're still very sluggish here, but we're trying to, carve out this base, this bottom here, and maybe potentially look to lift higher. The highs here from 119 of the past couple of weeks would be the next place where we would expect resistance. So have to keep that level on mind if we do see continuation to the upside next week. The Qs continue to act well. They are heading similar to the SPY, heading back up to the swing highs here from earlier in November, and we'll have to see how it deals with this overhead supply. So a very similar situation to what we just discussed in the SPY, I think is what's playing out here. You can see we did just fill that gap perfectly. And that was the place where buyers stepped in on Monday of this week and kind of bought the dip and continue to rally us higher. So let's look at some other markets now. We'll do TLT, and this one again, now we do seem to have this higher low, or at least a level that we can start to work with again here at 118. Still a very messy environment, all things considered. You can see multiple bands of resistance above us, so it's just not a real interesting place to be in my opinion. But I think right now you could trade potentially against these lows down here. You can see we're starting to tackle some of these fast moving averages, so probably expect some fight around this area as the short-term trend tries to change back to the upside there. USO continues to hang out here, looks pretty weak. These lows are holding right now, but it looks very vulnerable where it is right now. The momentum fast moving average is still heading lower. You get this big pivot down here from late August that maybe needs to be retested. So this one, you got to be very cautious here. I think this is actually a very nice short setup if we can start breaking below these lows and closing below them next week. But that's sort of how I would look at this. It's still in a short-term downtrend within a long-term downtrend, really, when you start to look at the big picture. So that's not a place I would want to be right now, not until we're back above, say, 1430. Then I start to get a little more neutral and then a little more bullish if I could start to break back above $16. Now, UNG, this one just continues to get pulverized. We had this brief kind of pause here, but you can see we snapped these lows this week, and yesterday on Friday we closed out down 4%, making new 52-week lows here in natural gas. So certainly a sector we still want to avoid right now, all things considered. Next, we'll look at gold. This one hanging out, looking pretty vulnerable as well. Silver, similar situation, looking very vulnerable. So all these commodities under pressure. They continue to be under pressure, and they have been for a long time. And again, it's just still difficult to see a bottom being put in on any of these names right now. Now, if we look at some leading sectors, IYT, this is the transportation average, and you can see here it's at a very important level, this 150 band of resistance here. It's been a big level going all the way back to June of this year, which it held as support, acted as resistance in August, acted as resistance through September, October, and November. This is the area where we really want to see the bulls take us higher here. You can see this is a weekly chart now. You've been in this kind of gradual downtrend, and now we're bumping up against this. I like the potential here. It does look like we've kind of put in a bit of a base here that we can work with sideways, maybe a short-term, or I guess in this case would be an intermediate or long-term pivot low here in the grand scheme of things, but the bulls do need to get us back above 150. I think that would be very constructive for this market. Other sectors that are working, XLI industrials, you can see they're clearing above this big $54, $55 level that's been significant going back a few months. So that is constructive. Materials continue to act well. They are at sort of that interesting band of resistance as well. So you want to see if they can punch through here. And then financials continue to act well. They still have a lot of supply to chew through around this $25 level, but they are trying to remain pretty firm up here near resistance. So I think that's those are four strong sectors to take a look at. Now, if we look at some names, some ideas for next week, PCG is the first one I have. This utilities name may be a little boring, but it is coming up to some very clear overhead resistance here. If you look at a weekly chart, you can see what I'm looking at. Very nice consolidation here. It's been in an uptrend. It's been basing out now for most of 2015. So be looking to see if we can take a breakout here above 54.30 or so, start getting closes above there. I think this trend would want to continue higher. So I really like the setup there in PCG. Next is AVGO. This one here, semiconductors name. This 130 area, again, seems to be a pretty strong point of resistance right now. Market hasn't been able to really hold above there since back in July, and even in April and March, this area played an important level of resistance. So we're not quite ready yet, but I think we should keep this one on watch, and this might be a longer term trade. Depends on how you want to cut it, but the weekly chart really shows the clear picture there in AVGO. Next is CBT. GBT, I'm sorry. This is a biotech name here. If we look on a weekly chart, it's a recent IPO. This is the full action here on a weekly chart. Had a almost 15% up week this week. And you can see it's a very young name, but again, in a volatile name, so you do want to mind your risk in this one. But $54. This looks to be basically the highs here that this has been made now for the past few months, trading as a public stock. So if it can start to break above 54.50, get a close above, particularly I think Wednesday's close, I think this one could really start to set in motion to the upside. So that one could be a fast moving one. Keep that one on watch. Next is IEX. Again, I think a weekly chart here is going to show the better picture, and that's what we're looking at now. You can see $79 all the way up to $80 has been this band of resistance that's held now for a couple of years, really, dating back to early mid 2014. So I think if we can start to get a close above there, this one long-term uptrend that it has been in now for since 2009. Would continue to be put in motion, but it really has consolidated the nice run up here for a few years, and looks like it's trying to get ready to go again. 4% up week this week, looks pretty good. And then finally Square, and this one isn't ready yet. Let's look at a 5-minute chart. In fact, it's at the lower end of this range, but I just want to point out that we do seem to have perhaps this opening range, this opening 2-day range of this IPO to work with. It's at support right now. Let's see if the bulls can continue to defend this $12.50 level. I think these are some pretty actionable lows. If you could get shares short of this, which I know they're difficult to get sometimes on the immediate IPO, you could trade a breakdown below $12.50 if we do see that next week. Otherwise, I think you'd really, you could, depending on your trading strategy, you could try and play, with buying this early next week with a stop below $12.50, trading to the top end of this range, or you could wait for it to try and get back up to this $13.80 level, prove itself, start making new highs here, and trade a breakout, which is probably what I would be looking to do. So this is just an interesting one to keep on watch. It's moving, it's liquid, so it's something that to consider going forward. And then, like I said at the beginning of the video, I got my favorite idea. I really like this one, going out in my newsletter tomorrow. So again, you can sign up on the top right hand corner, or go to thetraderist.com/join and start receiving that newsletter every Sunday. So as always, thank you for watching, and I will catch you next time.